Yes, so I mean, first on the broad, First Global has this lake of return theory that the lake overflows, or in a sense, the bear market comes when the returns have been way above trend. So if you look at India, for the 10 years up till end of the 2019, the returns were far below trend. In fact, the equity markets and all equity mutual funds did not even meet fixed deposit returns for those 10 years. So while from last year's lows, as you showed, there's been a big run up. If you look at it on a long-term basis, it's not as if we've been compounding 25% for 3 years as against an expected return of 13 to 15. That has happened. So on a long-term basis, your rolling returns are still quite low. So that gives you comfort that there's unlikely to be a huge bear market. Obviously, there can be corrections and there will be corrections. So that is one part of the story. Yes, you have to look at things sectorally. You have to look at stocks. And since we are talking individual investors, this is something a friend asked me a few days ago, that when should I get out of a stock? You talk about stop loss. And I said, yes, you have to have trailing stop losses, and which means not stop loss from the level at which you entered, since you're talking of novice investors, but from the high of that stock, whatever your level is, you set up that if the stock goes up down 20% or 25% from the high it has reached, I will get out, and do that systematically. But if the stock is going up, then you should let it run, because you don't know at the beginning, out of that portfolio that you have chosen, which ones will be the multi-baggers. I looked at Amazon that we identified at $15, or HDFC Bank 25 years ago at 3.5 rupees. Even the management would not have known that they will go up hundreds of times. If you say that the stock has doubled and I should get out, then you might get out too early. And you're again talking of retail investors. First of all, don't have a concentrated portfolio. That would be my number one tip, that don't be in 1, 2, 3, 5, 7 or even 10 stocks. Have 20, 25 stocks, because a number of your decisions are going to go wrong, which you have to exit. But that gives you enough of a basket to have something which will do well, provided you've chosen it with some system.